issue of the process flow, the documented automation, etc. And I like the fact that Wayne has termed the speed to market, because in fact, when you look at your processes, if you look at the document automation and all of that sort of thing, a lot of the problem with getting new things out in the market is all of these holdups in terms of the documentation, in terms of changing all the rules and regulations, etc., with regards to products and so on. So just to introduce you quickly, we're going to hear from Wayne Tom, the CEO of GhostDraft. Wayne, thank you very much and welcome. We've also got Dane Richards, the CEO of JMR Software company, and then we've also got Alan Berger, the CEO of InfoSlips company that specializes in the whole thing of taking that final stage of the document and really bringing it into the 21st century. So we're going to kick off with Wayne. Wayne, thank you very much. I look forward to your discussion.
Yeah, thanks very much, Tony. I assume you guys can all see my screen. I'm sure if you can't, you'll shout. And hi, everyone. It's really good to have this opportunity to chat to you, and thanks for taking the time. Speed to market is one of those bingo buzzwords that seems to pervade the insurance industry, and for good reason. It's something we all very much want because it holds the promise of significant value for us. But it's exciting to think that there are a number of success stories when it comes to speed to market, and lessons we can learn from some of the leaders. So what I'd like to do in my slot this morning is just take a little bit of time to share some context on this topic and also some personal experiences and observations. Globally, the insurance industry is changing quite profoundly on multiple axes. New customer needs, the customer base, as we've been hearing earlier, is growing. There's been a preponderance to an underinsured and uninsured population globally, both from the point of view of short-term and life insurance, and that is true in South Africa as well. But as the middle class globally grows, we're starting to see opportunities for new insured parties to come online. And of course, those people are very different from many of those who are on this call today, many of us on this call today, because they're Gen Z, and what they're looking for in terms of their insurance cover and the experiences they have in that cover is changing. They have different purchase drivers that they consider when purchasing insurance. You know, in the past, customers had very little choice. If you wanted to be insured, that was the product and that was the price. Now, not only do these customers want a tailored product, but they expect easy interaction with the insurer as part of this. And digital is becoming the default. I've got some stats here for you. 69% of insurance consumers in the US ran a research online before they had an appointment related to that insurance. And willingness to buy home insurance online is up 60% over the last 2 years. Maybe that's got something to do with COVID, but I suspect it's more of a secular trend anyway. So in addition to these changing customer needs, there are also new risks that we need to take into account. Environmental factors, we've often heard of the significant claims experienced by insurance carriers as a result of environmental catastrophes. These are likely to continue to grow as climate change becomes more of an issue. But it's not just the actual weather itself and the climate itself, but there are pressures, ESG, environmental, social, and governance pressures that are being brought to bear, not just on insurers, but on their customers, on their corporate customers as well. These provide extra risks and extra need for cover that need to be addressed. Of course, we've all heard of cyber risks. Many of us have actually experienced it firsthand. And then, of course, there are the increased compliance requirements, whether it's in the protection of personal information or some of the other regulatory frameworks that we've heard about over the last 2 days. And of course, COVID, unfortunately, has not completely gone away. Over the last couple of years, COVID has been the cause not just of significant additional claims on the industry, but also a reduction in the number of insured parties as people struggle more with the cost of living. So that's from a customer and a risk point of view. And internally, there are a number of dynamics that are changing as well. We see the workforce that has propped up our insurance businesses in the past starting to age, starting to gray. And that includes in the way we run our processes, in the way we design our products, and in the way we run our IT systems. And so increasingly, we have a skills shortage. As these people retire, we don't have a fresh set of skills that are fully trained up to be able to run the business the way we have in the past. So we really have this difficulty of figuring out how we're going to be able to not just run the businesses as they are now, but morph our businesses in the years to come. Post-COVID, globally and very much in South Africa, there's a need for lower cost products and processes. Customers are wanting to dispense with some of the more sort of optional insurance products and really get back to basics and make sure that their lives, their ability to earn an income, and their basic assets are properly covered at a very affordable level. One massive opportunity that we have to acknowledge is that as insurers, we've been able to accumulate massive data sets of policy and claims data over the years. And increasingly, we now have tools that enable us to process that data, to analyze that data, and to derive insights from it. And that's absolutely key in our ability to evolve our products for the future. So I would argue these three sets of mega trends are driving a need for new insurance products, both in terms of the coverage that we're able to offer, as well as the premium pricing model that goes with it. And then on the other side, the actual experience that customers have when interacting with the insurance carrier. So that's a global view. What about things in South Africa? Well, there's another dimension we need to consider here, which is that if we look at the South African population as a whole, we see that 60% of the population has some form of insurance. This, by global standards, is a very high number, but scratch the surface and you see that the vast majority of this is actually funeral cover. In fact, only 19% of the South African population has some form of insurance other than funeral cover. And you can see from my slide, 10% have life insurance. That's actually slightly down over the last couple of years. 11% have physical asset insurance. 8% have health insurance. And when asked, so why, what is the barrier? Why is there not an increased penetration of insurance products? South Africans quote affordability, not a big surprise. And so the insurance market in South Africa remains underserved. And in fact, the life insurance gap has been quantified to be about 15.4 billion Rand in 2019. So this is another set of dynamics that we need to consider, which argue that we need to bring new products to the market at the right price and then manage these cost effectively. So this leaves us with a bit of a dilemma. In the past, insurers have enjoyed great success with the business model on the left. Insurers have had products and processes that are focused at all times on managing the risk-loss ratio and to protect the balance sheet, both for the benefit of the policyholders as well as for investors and shareholders themselves. So the processes that we have in place have really tied into supporting that particular need. Our products are very carefully modeled, which necessarily in the past has meant that this has to be done manually. The products are highly standardized. They are very thorough in terms of how they are designed and implemented, which again, in the past has meant a very slow process to design the products as well as to execute the sale and servicing of those policies. The products are very robust, which has made them difficult to change, and they are compliant with regulations. In summary, our stability is our strength. We have that big double-hulled oil tanker, which is able to get us through the rough seas. But the challenge now is to balance these requirements with top-line growth, whether it's market share growth, which includes faster access to premiums, the quicker I can bring a product into market, the sooner I'll be earning premiums of those products. And alongside that, we need to reduce the cost of our operations. So maybe another way of saying it is our agility is our strength. And so we need to rethink what our ingredients for success are going to be for insurance businesses in the future. The insurance growth in the future is going to come from delivering new lines of business to the market faster. And so now we have to figure out, how can we change our processes to increase this top line growth, as I'm saying, but at the same time, not doing away with the enormous value that comes from the stability and robustness of how we've run our businesses in the past. We've got this juggling act that we need to deal with. How are we going to get that right? Well, Novarica is, many of you will have heard of them. They're a leading analyst firm in the insurance industry, and they did some research to identify what is holding back accelerated speed to market in the insurance industry, and perhaps what are some of the switches that we need to flick, which, if we're lucky, will fix things. So what did they learn? Well, they found that the timeline for bringing new products to market is typically 6 to 9 months. Obviously, that varies significantly on the type of product and the type of business, but that's a rough average. And product modification is usually about 4 to 5 months as well. They found, not a surprise to anyone on this meeting, that there are many functions and stakeholders. At the risk of oversimplifying, we might say that the research and drafting of the product is about 10%, and that includes the ideation and the building new business models. Design phase is about 40% of the total. This is probably the longest phase in most cases, because this is where we have to deal with a lot of the complexity of the product and the processes supporting the product, the rules that apply, any riders, benefits, exclusions, the likes, and that needs to go through several iterations to improve it. Then we go through the review and approvals, that's about 20%, and then the technical implementation and testing is about 30%. What they found is that insurers with new tech generally have faster product introduction and modification times because they have access to features and functions that many of the older legacy systems don't have. And they also found that smaller insurers are faster. The larger insurers are more tied down to complex processes in the past, and they found that they were 20% slower for new products and 10% slower for modifications. But perhaps the most important thing they found is that there are many steps and factors that can contribute to the delay in bringing new products to market. And there was no single factor that an insurer can immediately target for a surefire improvement in their speed to market. So ultimately, speed to market comes down to something else. And what I've done is I've tried to identify the following key levers to increase the speed to market. I've identified 7 factors which we need to consider. And this is a combination of what I have observed from some of the experts in the industry, as well as some of our own experiences at GhostDraft. So let me go through each one of those in a bit more detail and talk you through them. The first is to start with the product. We have access to deep data sets that we never had in the past and advanced analytics tools. And this means we have the ability to offer products which are far more niched and customized than we were in the past. So if we start with the product, we need to look to a product structure that is fine-tuned to specific customer requirements. It also gives us the ability to tap into market, what we might call micro segments. Related to that is a need for dynamic pricing which can be fine-tuned according to the specific coverage that we offer and customer base that we're offering it to, associated with the risk that those customers bring us. I think very importantly is to design the products that they are modular so that you can enable pieces of cover, various pricing options, and various supporting processes around those to be assembled almost like little Lego models to allow real-time customization for the customer when they need it. These products should be designed to be sold via digital, and we've heard some of that in just the previous talks. Fred and others were commenting on the importance of a surrounding sales and services channel that enabled rapid speed to market. And these products need to be able to be sold via these channels. We'll talk about that a little later in my talk. I think what we're seeing more and more of these days is also the inclusion of what we might call value-added services, which are beyond pure insurance itself. For example, predictive maintenance with car policies. In fact, more and more we're seeing layers of preventative services being offered as part of the product to make sure that there is no need for a claim, or that the likelihood of a claim is reduced. That's very much to the benefit of the policyholder as well as the insurer themselves. And that gets bundled into the price, the premium that the customer pays. The second lever to market, like it or not, is speed to market is going to depend on us having a very easy to access interface with our customers. We need to build a digital customer engagement platform. What do I mean by that? Well, it needs to be a reusable platform which will enable flexible customer interaction via digital channels, web and beyond. Web, as well as various mobile apps and perhaps even other channels as well. This platform needs to be reusable because at this stage, we don't fully know all of the products and processes that we're going to have to offer through that channel. So it needs to be something that we can rapidly tailor to the specific requirements. And it needs to enable flexible customer interaction. If today I need to gather some information about you as a customer, but tomorrow I need to find out information related to your claims history or specific assets that you want to cover, then the platform needs to be able to support that. It's critical that this front end, this customer engagement layer, needs to be integrated into our insurance backend. And that may be a very frightening thought because our insurance backend, our policy and claims administration systems are, in a sense, sacrosanct. We do not want to grant easy access to those systems, particularly to customers who may just have a phone in their hand. And yet that is exactly what we need to do. And the way that we do that is via a secure middleware layer. I emphasize the word secure. If we do this right, we should not be putting either the availability or the security of our data at risk by putting this middleware layer in place. And I think also very importantly is in this front-end layer, this user interface layer, we should aim to minimize the amount of business logic that sits in that layer. And the reason we do that is that business logic is part of our core IP and needs to sit in our core systems. And that the front end, while it is very flexible and very useful, should actually be quite thin. It should simply be a way of facilitating communication from us to the customer and from the customer back to us. What we're seeing more and more is a need to model the customer journey. So this idea of customer journey modeling. And what this means is we need to be able to document the journey from the customer's viewpoint. As we work more and more with Gen Z customers, we know that one of their purchase criteria is the ease of purchasing and claiming. And if we have a very complex and unwieldy process, then those customers are likely to want to go somewhere else. So thinking through the customer's journey from a sales, from a research, claim, from a renewal, from an account management point of view, if we can figure out what these journeys entail and write them down, then we're well on the way to getting faster into market with a product that will succeed. And these customer journeys need to be designed to support multi-channel. In other words, start on one channel and continue in another channel without too much thought as to the switchover that's involved there. The fourth lever is to use data. And as I said earlier, we have access to data at a level that we never have in the past. This is, I would say, possibly the single greatest enabler of future leadership in our industry. And that refers both to the proprietary data that we have from a policy and claims point of view, as well as to many external data sets that are now available to us. For example, I've heard of risk screening and policy pricing that that brings in police stats of various neighborhoods or weather warnings that are applicable, and using these to provide correlations with the risks that are faced by various policies. And we have the tools now to actually process that data and to derive intelligence from that data that we've never had in the past. The next lever is to seek to automate routine tasks wherever possible, and not just the routine tasks themselves, but also simple decisions. One of the ways we can do this is to use low-code workflow tools. Low code meaning, as Hanno was saying in the earlier talk, that we don't need to have a whole bunch of IT people writing actual code to encapsulate our workflow, but actual business users can use graphical environments to model the workflow that needs to be followed. And once again, the advanced analytics which we have at our disposal, which can be used to screen out potential high cost or high risk cases from a screening point of view during the sales process. We can identify market microsegments, in other words, specific opportunities for insurance products, which may not have been visible to us when we take a broader view, and to enable customized underwriting, which is also a real opportunity for us. And my last two levers to talk about are really less about the product itself and more about how we get something like this going in our business. The first is to set up an internal collaboration team. And here I'm not referring to a committee. I'm actually referring to a SWAT team type of approach, a small number of individuals which represent the different business areas that are in a sense actually ring-fenced from the broader business operations, and they're empowered to make decisions, maybe even to bend the rules. Because if we apply the same set of rules that have caused us to be slow in the past, we're not going to be able to achieve speed to market anytime soon. And despite the fact that we've got this SWAT team mentality, we have to take business users on the journey. We need to ensure that the business users that will be the ones that actually sell the product and service the product going forward will be able to monitor customer activity, track that activity, and access data related to that customer in due course. Because what we've seen a lot of, and I'll talk about this a little later, is a need that customers have for hybrid interaction with their insurer, not purely digital, but a human dimension as well. And it's that combination of both that is really going to be what customers are looking for. So let me share with you a couple of examples. I've deliberately excluded any South African examples here because I didn't want to offend anyone on the call whose name I might leave out over here. Lemonade, I'm sure many of you have heard of this company in the US. They have an AI chatbot which enables them to manage claims, and specifically not just the communication related to those claims, but the settlement related to those claims as well. And some claims are actually settled in under 3 seconds, which I think by all accounts is pretty fast. Here's a life insurance example. Haven Life is owned by Mass Mutual. They, in their underwriting process, they tap into a variety of data sources, including your prescription history and your driving records, so that they can provide fluidless underwriting. And that enables them to move from the initial application to a closed sale very quickly. A third example for you is Fetch. They're pet insurers. And what they do is they have a wide assortment of post-policy care options. For example, telehealth vet services. One of the examples I really liked is since Fetch has to pay you if your pet dies or is lost, Fetch will actually offer an advertising service and even pay a reward fee if your pet gets lost, because it's very much in the insured party's benefit as well as in the insurer's benefit to make sure your pet doesn't get lost. And similarly, boarding fees. If you go to hospital and you don't want your poor pet staying at home, well, they will pay the boarding fees for that pet. I think we can't really talk about strategic improvement in the insurance industry, and especially not at TechFest, without reflecting on how technology is enabling us. So I want to talk briefly about 3 technologies that I believe are critical enablers for speed to market. As Fred mentioned earlier, these new ways of working that we aspire to are only going to be possible if the policy administration systems allow that. And many insurance systems in the past have been developed as monoliths, and we face that widely in many insurance companies today. And what we're seeing is a move from this monolith model to what we might call an ecosystem. An ecosystem for our policy and claims administration system deconstructs these large core applications into multiple components which talk to each other. And each of these components is not a piece of code that gets integrated into our core code base. It's actually a cloud service. And that means it's accessed via an integration layer from our core systems, and the services that particular component offers are immediately available. So this integration layer allows the functionality of these third-party components to be extended very easily via secure APIs, application programming interfaces. And in fact, what we've seen, and you see an example of it on the right hand of the screen, is this idea of a marketplace. It's a little bit like the App Store on your phone, where multiple vendors offer these pre-integrated applications. On the right-hand side, this is a policy administration system called Socotra. It's one that comes out of California and has received a huge amount of venture capital investments from some of the big names that you'd recognize. And as you see down the bottom, they have a variety of apps. You simply have to click on that app, and with a couple of extra pieces of information provided, that piece of functionality gets made available to your policy administration system. So integration can be easy or even trivial, accelerating speed to market. And so I think insurance IT thinking needs to move from this mode of either or to both and. And what I mean by that is, in the past, we would have looked for one system that provided every single piece of functionality that we require. A modern insurance IT system has multiple applications and multiple vendors, and it achieves its functionality by the clever integration of all of those components. So more and more, I think we're going to be seeing the rise of ecosystems as a solution for insurance IT systems. The next IT trend I'd like to talk about is customer journey mapping. Customer experience initiatives, or as they like to call it, CX initiatives, are being developed by 85% of insurers to improve customer journeys. So what do I mean by a customer journey map? Well, as I mentioned earlier, it really is a map. It illustrates customers' experience through various processes and helps us discover ways to simplify that experience and add value to the customer. And it's really 2 things. It's both a design tool or a design philosophy, as well as an actual application that will help us do this in the first place. On the design side, there are graphical tools that enable us to document and capture a walkthrough of every step of the customer's journey and what they experience and what they do. And from an application point of view, it's really about the user interface that enables us to very rapidly, through low code, implement a front end and integrate it into the back end, like I spoke about earlier. A lot of the talk in insurance at the moment relates to AI, and that really comes from the fact that we've seen massive increases in internal and external data sets, plus an increase in computing power and advances in AI. And these 3 factors together have led to our ability to do profoundly new things in insurance product design and speed to market. In the last few years, to the extent that AI has been talked about in the insurance industry, it's really been about using predictive modeling algorithms for screening and underwriting and risk analysis. That's where we leverage the large internal and external data sets that I spoke about a little earlier. And those are used increasingly successfully in short-term insurance and claims assessment and processing. And also from a life insurance point of view, a lot of the focus there really is on the underwriting side, fluidless underwriting, where you don't have to go and see a doctor or a medical specialist before that policy is authorized. But what we've seen, and the graph on the right-hand side illustrates this, is in November 22, the term ChatGPT emerged for the very first time. And you'll see the blue graph shows the Google searches for ChatGPT. And the red line shows you the amount of activity on Google related to the term AI. And I don't think it's accidental that searches for AI are 4 times higher on Google than they were a year ago. And that's closely correlated to the searches around ChatGPT. So ChatGPT has led to a spike in interest in the insurance industry. Now, ChatGPT, unlike the predictive modeling I mentioned earlier, ChatGPT is a natural language processing tool driven by AI that allows or simulates conversations. So its use is in detecting and designing word or text-based usage patterns based on what it has learned in the past. And while I'm sure we've all read of articles online that talk about how AI is going to take over the world and we're going to be having to fight against the robots and the clones going forward, my sense is that if you look closely at those tools, they're not likely to take over the world per se, but they can have a profoundly positive impact for us in insurance. And very importantly, many of those tools are literally available now. We don't have to wait for the years to come to start leveraging some of these. And here's an example for you. At GhostDraft, we've been playing around with ChatGPT as a tool, which we can use to learn business logic and package it for reuse for our customers. So what we did on the right-hand side was we fed several instances of the same underlying document. In this case, it's a letter related to your insurance renewal. And we took several instances of the same underlying document and we fed it into ChatGPT and we gave it instructions to develop a reusable template. And it produced what you see on the right. This is from ChatGPT. It was able to identify the static text. It was able to identify fill points and recognize what kind of fill point that was. For example, it recognized an addressee name or an account number or a refund amount, a date of leaving the firm, and so on. And it even was able to recognize conditional logic. For example, if you're refunding to a credit card, do this, otherwise do something else. And so we're looking to build this kind of tool as an accelerator into our tool set going forward. And ChatGPT is available as an API. So as I was referring to earlier, this can become part of our ecosystem of products very quickly. We just need to have the ability to move fast and use these things. So let me speak personally for a moment and reflect on our journey at GhostDraft. The design, review, and approval of insurance documents, whether it's policies, claims, billing documents, renewals, and so on, they take a significant chunk of time in the new product development process. So what we do at GhostDraft is we enable insurers to get their products to market faster through our suite of document creation, automation, and distribution tools. And the way it works, as you see on the right-hand side, is that the policy and claims admin systems do their thing, and then our tool maps the data from those systems and merges it with document templates and workflow, possibly with further user interaction to produce the finished policy documents, claims documents, and the likes. And our system is fully integrated into leading policy administration systems like Guidewire, Sapiens, Duck Creek, and the like. Most of what we offer is offered to large to mid-size US carriers in the United States, but we do count several large South African insurers amongst our customers. And speed to market has been in our DNA for at least the last 10 years. So what does that mean in terms of how we built the product? Well, we built this ecosystem product as something that you can use to get up and ready quickly. It easily plugs into your existing IT ecosystems using this API layer. We've worked hard to make sure that we can capture and encapsulate business knowledge. What I mean by that is decisions on what clauses gets included in a policy, for example, or excluded, especially as those policies become more customized and tailored, are decisions that needed to be made by humans in the past. And now the technology itself can figure that kind of thing out. The system is designed to involve business users in the design, build, and review process. And what I mean by that is that there's no coding required. Business users can literally describe in natural language what it is they want the system to do, what it is they want the policy to reflect, and the system will then act on that. And if you want other users, whether it's marketing, compliance, underwriting, operations, distribution, to get involved in the process of reviewing these things, the methods we have for allowing that kind of review and refinement and ultimately approval are something that are core to the tool that we have. We've also provided a layer to interact with customers. You don't have to use it. That is something you may do through another portal or application, or maybe your policy administration system might handle that. But if you don't have that, we have additional tools that enable you to interact with customers and gather that additional information and follow that defined user journey. And we've also worked hard to add additional pieces of functionality that specifically support the steps in the product innovation process that I spoke about earlier, the research, design, specify, review, etc. In other words, all of those upfront steps in the building of the new product. And the way we've done that is to build tools which allow the various business users to access the product on the web and view it and see how it is constructed, and then provide their review and refinement and ultimately their approval after that. But I'm sure we all acknowledge that life is never perfect, and we've learned things that do work and things that don't work over the last couple of years. And here's a few things that have worked or not worked. We found it's easier to convince the IT team of these tools than it is to get business users on board. So we need to take them on the journey. We've had to work very hard to have these business users become part of the team to evaluate and trial new products. And then we sit with them in the first weeks after that product goes live to guide them on the new processes and tools. Many of them just want to continue doing things the way they've always been done. And that simply isn't a recipe for success. We have also found that going for simple wins is a lot more useful than heading for the city on the hill. We all have this idea of what we're working towards, but it's just unachievable in some ways, and simple wins are just much faster to turn around. If we put in place that simple win, we essentially give ourselves strategic headroom to continue to improve the product after that. And so the idea of building a perfect solution is not something we really work for up front. We work for putting in place a simple solution which will be flexible enough to evolve very quickly after it's gone live. Once it's in the wild, we can see what works and doesn't work, and we can change it very quickly. I would say don't involve more people in this fast process than you need to. A product designed by a committee will at best be very slow, or even worse, it will be a compromise. So we have found that if you get a small group of people to design these new products, that's more likely to get you into market a lot faster. You need to be prepared for pushback and problems. They will happen. And you need to set aside some energy and capacity to deal with these problems as they come. But at the same time, we are not going to be able to make an omelette without breaking some eggs. And I think we need to be prepared to get a little bit pushy to get the things done that we need to get done. Not everything can be done by consensus. And finally, don't lose sight of the goal. Why are we doing this? We're doing this because we want to increase speed to market. And if our own internal processes, or for that matter, external processes, are holding us back and do not allow that, that's a surefire sign that we're on the wrong track. And so that's an opportunity for us to intervene and make changes at that exact point. So where to go from here? Well, as one of my esteemed colleagues say, one must start. We must get started. having discussions and internal boss about how things are going to be done is never really going to get us going. And the example I like to use is what I call the boat versus bridge model. If I have a wide river that I want to traverse, I can do so by building a bridge across that river. And building that bridge will take a lot of effort, a lot of time, and a lot of money. And I can't use that bridge until it crosses the river the entire way. Another option is a boat. Just one boat. I can put a couple of people in that boat. I can act as a ferry and get them across the river and bring some people back. And if I've got more people than can fit in the boat, I can get 2 boats and so on. I can scale that. I think an example outside of the insurance industry that I'd like to mention is the ShopRite 60/60 example, which I'm sure we're all familiar with. You know, there was a time a couple of years ago when the idea that a retailer in this country could deliver your groceries to you on the same day that you ordered them, let alone within 60 minutes, was unthinkable until ShopRite 60/60 came along. And what they did was they started small. They started with a reduced range. A typical Checkers store might have 40 or 50,000 products in it. 60/60 started with less than 1,000 products that you could order online. They had very simplified processes. Once you placed an order, it didn't go into some complex order management system. It literally generated an email which popped out in the store, and somebody printed that email and they ran around the store and they put the products in a basket and they got it on its way. And the customer front end was literally just the app, which was designed by some clever people very quickly. They were able to get that product out and they were able to see how it worked and didn't work. They were able to fail fast and correct where things needed to be corrected. And then they scaled it accordingly. And they have become now the leader in online shopping in South Africa. So what does that mean for us in terms of where we go to from here? Well, I think we need to start by identifying one customer interaction point where the value is easy to articulate. For example, engaging with new customers to produce a quote. And then we build a rapid prototype of the product, of the processes, and of the systems. And rather looking to re-engineer all of our core systems, which we all acknowledge will take years, if not decades, what we can look to do is leverage an existing third-party solution that can handle the digital journey with that customer. And that will enable us to get things out the starting blocks very quickly. I would suggest we ring-fence the broader business impact at first. We need to acknowledge that we are potentially putting a small amount of capital at risk as we go to market quickly and as we see how these things work. But if we ring-fence that business impact and monitor very closely how that product is evolving, we can learn and we can make course corrections. I have to emphasize that this doesn't have to be a forever solution. It's just something that gets us going and gives us the strategic headroom to grow things from that point forward. In fact, if we do things in the right way, these systems should be replaceable with limited impact on the core at some point in the future. And yeah, so those are my views. Thank you very much. And I'd like to hand back to our MC, Tony.
Fascinating stuff. Yeah, that was a whole journey. Thank you so much, Wayne. You unpacked it so eloquently for us to see where the documentation actually, automation actually fits in, and how it's part of the larger process of the product development right up to the launch and the distribution. We've got Dane here as well, and Dane Richards, the CEO of JMR. And Dane, I've spoken to you a few times about your product offering, etc. And in a different way, you also accommodate quite a bit of the documentation process. Love to hear, what your view is on this process and where we're going with it.
Thank you, Tony, and good morning, everyone. So thank you to Wayne as well for sharing some great insight there. I agree with a lot of the points that Wayne has raised. And in some ways, if one was looking for strategies into how one could accelerate their speed to market, one only needs to look back at all the topics, I think, from the previous sessions, being one, modern digital platforms looking to the cloud for scalability and security. Two, open ecosystems and APIs for collaboration and integration. And then thirdly, looking to your data for insights and guidance towards sort of innovating in that space. However, I want to break down speed to market, and let me ask a question. What is the major benefit this offers insurers? Well, to my mind, speed to market allows them to differentiate themselves from their competitors. Now, if that's the case, then the next question I ask myself is, to accelerate this, what can one do to make the biggest impact on differentiating oneself from a competitor? And first and foremost, to my mind, is the customer journey that Wayne touched on, in particular, how one communicates to one's client. So I'd like to talk a little bit about effective client communication and some of the strategies insurers can use to enhance it. And by virtue of that, aligning their business to competitively bring new products to market. So to start off, number one for me is building trust. Now, trust forms the foundation of any successful client relationship. On day one, Tavia from ours, he spoke in detail around this point, and I agree wholeheartedly with him. There's effective communication plays a pivotal role in establishing trust by clearly articulating insurance policies, coverage details, and terms and conditions. Insurers can ensure that clients have a comprehensive understanding of their coverage. Honest and transparent communication builds trust and fosters long-term relationships and partnerships. This touches on a point that Wayne raised as well. I'm going to refer a lot back to his presentation because he has a lot of great points there. Identifying a customer interaction point where value is easy to articulate. A great example of this as well is, I think, what Hanno from Brisk showed us in what they've done with TravelSafe. I thought that was a fantastic sort of customer journey that one followed through, and a great example of how one can build trust within a transparent process. Then point number two, when we talk around client communications, I think is the objective around clarity and simplicity. Those in the insurance industry think it's simple, but to everyone else, it's an incredibly complicated thing. There's intricate policy language and technical jargon. Stripping away those complex concepts and using like clear, concise language that clients can easily understand goes a long way enhancing the customer experience. Explaining concepts in everyday language, it builds trust, and to my mind, it enhances the client comprehension of what's the message and the message and the communication you're trying to convey to your customers. Point number three then for me, proactive communication. Big important one here. In the insurance industry, I think proactive communication is fundamental. Doesn't matter the channel in which you're doing this, but clients expect regular updates, especially during the claims process. There should be timely communication about policy changes, renewal notices, and relevant updates demonstrates professionalism in the system and a commitment, from your business to be keeping your clients informed. Proactive communication, it also allows insurers to address potential issues before they escalate to the point that you may potentially lose a customer that you've had for many years within your business. Then moving on to number four, personalization. I think great client communication involves personalization. Tailoring messages to client-specific needs and circumstances. It shows that insurers value their individuality. Personalization, it can be as simple as using the client's name in correspondence, or customizing communications based on their coverage and preferences. This, I think, is one of the areas I think that generative AI models may make the most impact, specifically within the insurance industry, as it's not in the realm of impossibly now, today, for one to send a completely unique message, for say a policy schedule welcome letter to every single one of your clients. It contains all the fundamental facts and information you want to convey, but it's personalized specifically for every individual. Then moving on to point number 5, I think empathy and compassion. So this, I think, is a great point. Insurance is often associated with challenging life events. You know, there's such as accidents, illnesses, or property damage. This is when your customers are actually interacting with you when there's been a significant loss event. So good client communication requires empathy and compassion. Insurance should be sensitive to clients' emotions and demonstrate, you know, that they understand and that they support these individuals through this process. Compassionate communication can alleviate a lot of stress and anxiety, providing reassurance during the difficult times. Again, another hugely powerful aspect, I think, of generative AI models is you now have the ability to determine emotion from an incoming set of communication and generate a reply that considers the emotional state of that client. So you can communicate back to an individual on the same emotional level that he's communicating to you. That, to my mind, is very powerful. And then number 6, I think the claims process. And I joke, I say, what's the number one way to get your product to market quicker? Well, the answer is to go to market and don't worry about claims. Just use your waiting period to implement your claims process. But it's alarming how often that comes up as a suggestion. And to be clear, this should never be an option. But I think claims handling, especially from a client communication perspective, it's a critical aspect within the insurance industry. Communicating the claims process clearly and proactively is essential to maintaining your client satisfaction. I did note a comment in the comment section from Charmaine Pollock. She made a very good point around this, is when going to market, claims processes are in danger of taking a back seat to the product itself. This is never a good thing, because it's one thing to get your product out, but if you can't service that product and facilitate a claim in a way that your customer determines to be appropriate, you're not going to have a long-term product at all. Clients should know what documentation is required, the expected timeline for claim resolution, and any other relevant details relating to that claims process. By keeping your clients informed through this claims process, insurers can manage expectations. And again, going back to my first point, which is effectively building trust within your business. Now, in conclusion, I think my message is that effective client communication is vital in order to support speed to market. It builds trust, strengthens relationships, and enhances the client satisfaction. Is one of the areas I think we at JMR, we focused on when we built our insurance administration platform, CloudCover. While it may not seem to contribute directly to bring products faster to market, I think it has a direct correlation to supporting the ability to bring products faster to market. By adopting strategies such as clarity, simplicity, proactive communication, personalization, empathy, and continuous improvement of that communication process, I think insurers can differentiate themselves in what is already a competitive market. And out of that, you establish long-lasting client relationships. Now, I've intentionally kept my talk short and concise to emphasize the fact around clear communication. I want to thank you for your time and hand over back to you, Tony. Thank you.
Thank you very much, Dane. That was so well put together. Concise was a great word, because you encapsulated everything there. And I think I speak for the audience when I say I'm glad that we are recording these conversations, because there's so much in the presentations and the conversations like yours as well, that it's good to have a record of that to go back to. So thank you very much for that. We move on to Alan Berger now. Alan, the CEO of InfoSlips. Alan, I'm sorry that I got you out of bed so early. If I understand correctly, I got you out of bed at about 2:30 a.m. this morning. So welcome.
Yes.
Thank you very much.
Yeah, thank you, Tony. Yeah, 2:30 and it's now 5:30. So, but I didn't want to miss TechFest, and I so yeah, thank you very much, and thank you for having me here. You know what Dane has said so far, and Wayne, you know, it's a lot of what I had in mind is it's valid stuff, it's good stuff, and it's been covered. I just add a few things. One of the big trends that we're seeing is this whole idea of changing away from customer communication to customer conversations. So yes, there is documents traveling backwards and forwards between the customer and or the person being insured and the insurer and sometimes other parties. But more and more people are starting to turn that into conversations, and certain technologies, some of them being you know, spoken about today, and even AI allow us to do that now. Okay, because that then just talks to dealing with the person on a sort of a human level, even though it's driven by technology. It talks to the digital empathy that we spoke about, where you understanding the person's situation, you're building trust with that customer, you're available for them 24/7 effectively, and you know, really using that to build the best experience for a particular customer. So this whole idea that you can talk to my insurer, but sometimes in most cases, not even a person these days. We're seeing a lot of that happening. In fact, we've done some work around what we call turning statements or turning communications into conversations. So that can be as simple as I'm looking at a document, I can ask it questions, I can get answers instantaneously. It can tell me not only about that particular document and answer questions. You know, we did a little thing where you can have a long policy document and you can just ask it, well, is this particular item covered, and what's the process, and what's my excess? You know, yeah, sure, that all of that is contained somewhere in my document, but by just talking to your document, entering into conversation with it, you can get an answer instantaneously. But even more importantly, it can be more aware of things beyond that document about what the insurer needs to convey, and also it can understand the profile of the customer and answer accordingly. A couple of other things that I just wanted to talk about. One was, and this was just really notes that I made as I looked at Wayne's presentation, and a lot of this was said, but I'd like to add a few things. You know, starting with the product is the right place to start. What we're seeing now is this, even beyond what I call micro segmentation to one-to-one segmentation. You know, and that scares a lot of people when you sort of think you're designing a product for one. But it goes down to that modular approach, and it's not, you know, it's not that you're just designing a new product every single time. It's a product that is very, very modular, it's very granular, and allows that to be put together in such a way that it's addressing that person's needs. The other thing is that we are seeing a lot of around the digital first and around that area that Wayne mentioned, was that we're seeing now with Gen Z, and soon I presume Gen Alpha as well, is that they don't want to talk to people. This might come as a shock to think. They want to do the whole transaction without engaging with anybody, okay? And in fact, they sometimes will make a decision of how to engage as soon as they need to wait for somebody or wait to talk to somebody, whether that's a chat, whether that's phone, whether that's on WhatsApp. They will often, in some cases, shy away from that when it's a human. They want systems and processes that get them where they want to go. They want to do it on their own terms. As was mentioned, they've done a lot of research before. So in a lot of cases, they come in quite informed to what they want to do. They just want to now get a few last things out of the way and make that purchase decision. The other thing around omni-channel, a lot of people I've seen in insurance and think of omni-channel as email and phone, and that's kind of, and maybe, you know, a little bit of online. But when we're talking omni-channel these days, we're talking beyond that. It's really being able to do everything in digital channels and start in one place and another. And that can be mobile apps, it can even be progressive apps where I don't need to install anything on my computer or on my phone, where I literally can engage instantaneously without having to go through a big process before I can do that. And a lot of the messaging apps are facilitating that as well. And we'll see AI and things like generative AI and chatbots also facilitating in that area as well. Yeah, I just want to sort of end off with one thing, is that I also use pet insurance, similar to the Fetch product that Wayne was talking to about. I'm based here in the US, and we've got some pets that we brought out from South Africa. And interestingly around that was that I did this whole process, including claims and whatever. I've never spoken to a person. It's worked seamlessly, it's worked quickly. I've never got stuck. And that included everything from onboarding, which is super critical, right through to, getting the payment set up, right through to claims. And so it's possible, not only for pet insurance products, in many other areas as well. Tony, that's it from me.
Thank you very much, Alan. Yeah, I know, very interesting. I like the fact that you mentioned the conversation. That's where you can get to the empathy. That's where you can, especially when it comes to claims time, etc. That Dane also mentioned the whole thing of being in the same, answering in that same emotional tone as that. And I was thinking, I hope I'm not the only guy who, when I have a conversation with AI, that I say please and thank you, because it's such a habit. And in many cases, the AI actually responds with saying it's a pleasure, or that sort of thing. And I think we need to keep that in mind when we do. Because it's not, Wayne, and maybe you can just expand a little bit on that. You've unpacked it so well, but it's not just about document automation. It's not just about process. All of that is actually done to be able to have the conversation. How do you see that? Everything is done to have a conversation. So maybe I should put it differently. Where will you, if you look at an insurance company and a development of a product, etc. Now, many companies already have the system. They already have products, etc. We're not just talking about developing a new product and now we're putting a system in process. You're talking about the stuff is already there. We're already selling products. We already have a system that sends out documentation, etc. How do we now go back and take this process and turn it into what we've spoken about now, to be able to have a conversation? To who starts that process? Is it the sales guys? Is it a tech guy that sits there and says, hey, we need to do this? Where does this now fit in? Because we already have the systems, we're already doing this thing.
Yeah, very, very difficult to do, Tony. If this was all easy, I don't think we'd all be having this conversation right now. To me, in some respects, we have seen the enemy and it is us. The reason we haven't been able to make more progress is because we have so many completely legitimate reasons for doing it at the speed that we currently do it at. And yet, that means we're never going to make progress. We have to think of this differently. And that means that we have to make some hard decisions, and we have to take some risks that feel uncomfortable. And it all starts at the top. So there has to be executive will to want to make this happen. And there has to be almost a special dispensation to set aside certain groups of people to say, go and make it happen. And you have got this window of opportunity to do something very different. And you say, use this opportunity and get on with it. And that's why I say, if some eggs need to be broken in this process, then some eggs need to be broken. We will only get what we've always got if we keep on doing the same thing that we've always done. I think it really starts with C-suite commitment to want to do something differently. And then with the setting aside of a group of people in some kind of rapid prototyping model, where they can be charged or briefed to deliver specific new products in a specific new way. And that's how they get it done. We have worked with some clients who have been looking to offer digital-only products and the services associated with those products. And I think that they've had a fair degree of success, but even then you can see the tendency to keep on wanting to go back to how we currently do it and say, but how does that work with this? And our underwriting team does it in that way, and marketing is going to say this, and so on. And there are all these reasons to slow things down. So my opinion, maybe a little controversial, is if we really do want to unblock this jam and increase speed to market, it might get a little messy. And we just need to contain that mess and the risks and costs associated with it. But that shouldn't be a reason to scare us off.
Alan, maybe just to ask from your side, normally, I mean, the sales process, usually as a salesperson or distribution person, you look for pain points, and then you find a customer that fits that pain point, and then you raise that pain point to him to try and get him to see why he needs your product, because you're going to solve a bit of that pain point. In this instance, who do you go to with those pain points?
It was interesting. Wayne spoke about the technical guys or the IT guys that he found easier to convince than the business guys. But often they're not the guys. They might experience system pain, but often they're not experiencing the sort of customer pain or the forefront there. So in a lot of cases, and it does vary from engagement to engagement, and it depends at what level you're engaging. But more often than not, we also have success with finding a particular person who's the custodian of that, or is dealing with that pain, let's put it that way, inside an organization. Okay, so that could be a process owner, a business owner, or a division person, and then go to that particular individual and use them kind of as the springboard, if you want to think of it, to the rest of it, because often that person can't act alone. You can't solve their pain in isolation. You then do need IT, you do need the buy-in from the business. But often that's the person that we would go to, and that would often rapidly expand to a broader audience.
And Dane, from your side, in terms of, because, systems nowadays work on sort of not necessarily catering for everything, but being an open system where you can plug the APIs in, all of those sort of things. So during that process of bringing in the new system, etc., how do you address then the different aspects as to when you bring in an API to address this conversation or communication with the client?
It's a good question, Tony, and I know Brett mentioned in the comments is, would the customer not drive this? And I think it's a good point in a sense. Is, to my mind, the aspects we've talked about, open API systems and modern platforms, these are features that are beneficial to the insurers. You try to sell that to a customer and say, look, I've got a new product, it's all doing, they don't really care about that aspect because it's how you run your business. So their impact as a customer, they're just looking for their journey through your product. So to my mind, that should always be the first focus, and Wayne alluded, is what is the customer journey? If you're introducing a new product or moving to another platform, focus on the user journey. Everything else can follow on from that. So be it an automation of a process within that. But if you don't get your customer journey right, then it's that you're not going to get the uptake and the buy into whatever you're trying to introduce to the market.
But maybe wanting to be a little bit controversial here, I think, with all three of you guys. Let's just look at me being a distribution guy. I have a region that I look after. I service a whole bunch of clients. I've got X number of brokers that I service through my branches, etc. I want to increase sales. Now, we all know from the conversation that we've just had that if that journey is great, all of those sort of things, if we can have good conversations, if we have the right data of the clients, all of that, we can cross-sell and we can upsell and all of those sort of things. As the people in distribution, so to speak, and each section of the business will have its own needs, but as a distribution part, I'm not worried about the customer journey. I just want to know, I want to take these customers that I've got, and I want to be able to identify the upselling and the cross-selling through the communications that somebody else is doing. I'm not doing this communication, somebody else is doing it. How do you bring all of that together? And Wayne, maybe you can answer that a little bit for us.
Well, I mean, I have to say, I think, you know, cross-selling and upselling is absolutely a part of the opportunity, but in many ways, particularly in South Africa, there's enough of a new market out there that we can be servicing as well if we're clever. And you know, unfortunately, we can't just say, well, I'm in distribution, I just want to sell, and I don't particularly care what the customer has to say about it. The way I will sell is by caring what the customer says about it, and by really understanding what their requirements are, as Dane was saying, and by giving them answers that are answering the specific questions that they have. It touches a little bit on the point Brent made in his comments on the webinar chat, which is, would the customer not drive the change? In some respects, absolutely. They are the ones that drive the change, but the customer doesn't work for our business. The customer, because of circumstance, is saying, you provide me with a product and surrounding processes and costs that suit me as a customer. Learn who I am, understand what my needs are, and then address those. And then they're expecting us to step up, and that's what we have to do.
Alan, any thoughts from your side?
Yeah, just more around the tools that can be used. I mean, you know, as it's alluded to, there's a lot of data. Customers have this data. Analytics can provide a huge kind of insight into that. AI-driven analytics can even go a little bit further in some circumstances, but often to identify the fringe cases. You know, if you're talking about upsell and cross-sell and upsell, or new products, sometimes you're not realizing that you're just having drop-off on the edges effectively. So you're having quite a significant market that wants your product, but maybe a little bit different, and you're not understanding that, was wanting that, but with a little nuance to it. And often that can either be an addition to the product, or it can be a completely new area. So you can use that analytics to do it. Also going back to that whole side of it, before you kind of mentioned, Tony, earlier, that you know, even before the customer gets to your product, that whole side of it needs to be done really, really easily to discover. That's right from the first time the person goes to Google and types in something for that they're interested in something, right through to understanding your offering, your product in a simple, easy way, right through to engaging with your company, and that's often through various channels before they do the sales process. All of that must be super easy, slick, and frictionless, and then follow that up by great onboarding. And then I think that you know, you can really unlock some new value.
I mean, what it looks to me, and I mean that we do know that, is that you know, you talk about the seamless process and never speaking to anyone, but not all products are like that. In other words, one has to, in some way, think about the silos in terms of the complicatedness of certain products, etc., and then look at how that journey will differ there, and not think purely digital, and not think purely machine, AI, etc. But at what point does the human come in?
I think Tony, for me, is that you don't want to talk to somebody till you want to talk to someone. Okay. In other words, if everything's working fine and I'm achieving what I can in the digital channels, and I'm not getting any friction, and it's working and it's doing what I want, but as soon as I get stuck, then I want to talk to somebody. Okay. And in that scenario, that handover, that omni-channel handover between systems, apps, wherever I'm engaging at that particular point to talk to somebody, needs to be as frictionless as possible. Because otherwise that's where eventually you build distaste in customers. Going back to that journey mapping, you're getting people that are unhappy, and ultimately that can cost the business money in terms of churn and happy customers, and then going elsewhere.
And
if I can chip in on what Alan's saying is, and I would fully agree with him, particularly younger customers are very much about wanting to do everything digitally if that can be done, and that's the first choice. But it particularly relates to simpler steps in the process. For example, renewing my policy, or maybe adding an additional asset onto my policy or something like that. Maybe even doing a basic claim, or even getting the claims process going. But I think particularly for more complex products, and particularly when it gets to life and disability, there is sometimes a need for them to say, can I just speak to a human for a moment? I just need some advice here. And being able to, click a button and immediately click to a human who's fully briefed on who I am and what my needs are is something that a lot of customers would absolutely love. But having said that, I fully agree with Alan that Gen Z would prefer not to even do that. But what we are seeing is really a need probably for a combination of the two, where the preponderance of channels are digital, but where there are these kind of, express lanes to a human if and when I need them. And I should add, by the way, that what this means for intermediaries and brokers and agents, in many ways, it's the same thing. They absolutely can continue to own that customer relationship, but they too will need to have this mechanism where they're able to have a digital interaction layer, but also a mechanism to route it through to humans as well.
Maybe to jump in there as well, Tony, if I'm allowed, and I like Wayne and Wayne and Alan's suggestion around omni-channel. I think it's a great initiative, but one must be cognizant of the fact that within omni-channel, it's to my mind, it's a business-driven requirement. As you say, like individuals, if they're talking to you via a particular channel, I don't think it's in their factor to want to change channels. The only reason they would change a communication channel is either you've hit a point where you can't service something, or they need a requirement. So say someone's chatting on WhatsApp, and then you send them a form that they need to fill in an email to. You've broken that chain of communication, and now by creating an omni-channel system, you can take away the chaos of continuing on another platform. But I think inherently the ability, if you're able to service an individual's entire query along a single line of communications, I don't think they're going to jump to another one within that aspect.
And in fact, much of the time when we have to introduce this kind of omni-channel thinking where customers are switching between channels is because the whole interaction process is asynchronous, because we cannot do it all in one sitting. We have to wait for this approval or that check or this to be gathered. So what we should be striving for is a single point of encounter, like that lemonade example. I'm going to get online, and for a simple asset that's insured, I can press one button, and 3 seconds later, it's settled, it's approved. That's what we should be aspiring to. I'm not saying we should do that for all products, but it gives us a suggestion of what a real customer journey looks like. Let's face it, buying insurance and claiming on insurance products is it's not a fun activity. It's a little bit of a chore. And so our objective with respect to customer experience is to make it as short and painless as possible.
So if I understand correctly, and I mean, there's so many aspects to this. As I said earlier on, it's great that it's recorded, that we can go back to it. But each sort of person, so if I look at the intermediary, for instance, as one of the players, and I look at the insurer or the UMA, whatever, on the other side, need to look at specifically their customer, what interaction that particular customer wants from them in that journey, and then make sure that they're able to do that. It's a bit tough for intermediaries because they're not involved in that conversation. That when the design is being done and the systems are being built by the insurer. So I suppose there needs to be a bit more collaboration between that, because it's not just about the insurer that goes direct, it's about the insurer that goes through the intermediary as well, and how that affects the intermediary And as we now say, you want the human when you want it. The client might at some point want the intermediary. And where does that happen? Where does that step in? Yeah, it's a pity Hanno is not here now, so we could have asked him how he sees that as well. But yeah, it's a fascinating development.
Yeah, I mean, I suppose it's wishful thinking in a way, but ideally an intermediary would be able to interact with their underwriting partners and principals and say to them, this is what I need from a systems point of view and the way I want it to work. And some of the more modern policy administrations and claims systems actually provide white labeled solutions that the intermediaries can use to put a front end on it and present it to the market as if it was that intermediary's portal or that intermediary's front end. That's what would be nice to happen. It's not always possible. I mean, in many respects, the insurance underwriter is the one that has a lot more say and sway in how it's going to work, and certainly a lot more dependence on their systems. What we have seen is that for relatively simplified digital front-end layers, that's not necessarily the hugest investment to get that up and running. And if you can do that and have a clever way to back-end that into the insurance company's systems, that's how I would be thinking of it from an intermediary point of view. Having said this, it's going to require a certain amount of an investment potential to get this done for an intermediary.
Yeah. Dane, maybe you've got some input there from your side in terms of the conversations you have when you put in together a system for a company.
I mean, anecdotally, I guess I go back to the thought of how many systems we've migrated in the past that have come from Excel spreadsheets. And you think a large portion of the industry doesn't need a whole lot to administer policies in the day. Usually the reason individuals move to platforms is because you reach a level where your processes are letting you down. For example, your manual processes and all that. And so that drives that aspect about putting in place a system. And I think it's a fair argument to say, if you want to ensure that you are capable of doing new things, then put in the system, be proactive about it. But if your goal is to get something out there, then the focus should be on the customer journey first. You can always fill in the aspects behind the scene afterwards as a scenario. But if you don't have your customer journey right, again, I'm saying you're probably not going to do as well as you would have without that, with a sort of a platform that can cater for anything but a bad experience to the customer.
We're getting to the end of the time. It's a very interesting conversation. Maybe ask just a last sort of word, Alan, if you want to put in some last comment.
Yeah, I'd also just say that build on that customer journey, that should include the intermediary. Intermediaries are very good at holistically looking at my needs across a broad range of things, across a broad range of products, short-term, long-term, and other types. And in that circumstance, I should be able to engage with my intermediary just as seamlessly as I do a individual product on an app somewhere. Okay, the experience should be similar in my opinion. And then lastly, well, my sort of final comment is that I think we're at a pivotal moment. Wayne mentioned how AI is invading sort of all aspects of all businesses at the moment, and I think we're really just at the beginning of that journey. And there's a lot of stuff in terms of communications, in terms of speed to market that will be enabled, and I think we're going to see a lot of change in the industry over the next few years, and probably at a pace that we haven't seen before.
Alan, you will love this comment from somebody there that says it's also important for insurers to be sending their customers attractive, crisp, easily read and understood and modern looking policies and related correspondence documents instead of the ponderous and often overly formal, older traditional documents. Fits right in with.
Couldn't have said it better myself. Yeah.
Yes, yeah. Dane, last word from you.
Yeah, maybe just to finish a thought on the customer journey, and specifically we talked around the intermediaries. I think they're a good concept, I think, in my mind to grasp is if we look at the intermediaries journey in itself, that's their interaction with your platform. So that becomes, and I think we've touched on it in some topics yesterday and today, is how open and integratable is your platform, because that gives them the ability to have good customer journeys where they are the customer to your platform. And then it's a different frame, but still you're servicing a need within your customer. They just being the intermediary, and having an open platform, cloud-based, that you can then integrate well into third-party products, that gives the intermediary a lot of powerful tools to build something that suits their customers and is unique for their offering.
Yeah, no, it makes absolute sense. Wayne, you've got the last word before we break for lunch.
Yeah, I think we've seen in this session, we've heard about so many different tools and approaches that we now have at our disposal to increase speed to market. So honestly, I have to believe that speed to market is not something that's going to happen to us. Speed to market is something that we can make happen if we are committed to making it happen. And we've spoken about the many different ways that that can happen, but it really starts with a willingness to want it to happen.
Absolutely. Wayne, thank you so much for that. This was a fascinating session again. Once again, who would have thought that talking about documents can end up in such an interesting conversation. So thank you guys very much for that. Alan, for getting up so early. You can go back to bed now. Dane, thank you very much for joining us. It was great to have this discussion. And then just for the audience sake, thank you for your engagement in that. It was great to see the comments and so on. We've got a break now until 12:30 when we're going to unpack AI, which is going to be a fascinating session in itself. So enjoy your 30-minute break and so on. And I just wanted to mention as well, thanks to the guys from CNN&Co events behind the scenes who are pulling all the strings to make sure that everything happens on time and happens correctly, and that we appreciate that as well. Thanks, guys. We'll see you a bit later. Thank you, everyone.
Thanks, Tony. Thanks, fellow panelists.